Welcome back, folks. Welcome back. Hope you all had a great weekend. BTC is off to Pump City, and of course we are going to look at the trading setups that I have for you for this week. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think it's useful. Also feel free to follow me on Twitter and Instagram. Both those links you'll find in the description. Without further ado, let's start diving in. And I want to start off this time with the open interest because as you might have remembered, I said, I think probably around 2 weeks ago, I said, woof, open interest is getting high, way above 500 million, and I want to see it somewhere between 400 and 450 million. And I was already talking about this when we were reaching these levels right here, way above 500 million, as you can see. And this pump all the way to the upside is on a decrease of open interest. So that means that there are positions closing. Absolutely no bull market. Because if you want to see a bull market, then you want to see an increase of open interest. So that's positions opening, and these are all positions closing. So don't get too excited yet. Of course, we can still go much higher for price and still lower for the open interest. But now we are getting already, just when we're looking at open interest, at the more favorable levels. I would actually like to see it to go a little bit lower. So yes, then BTC could go a little bit higher if positions are closing. So with that being said, just very nice to see that you can see it already way ahead in the charts and in the numbers. If you see certain open interest at a certain period of time in a cycle and in the year that you're thinking, this is probably not where we should be. We're a little bit overextended. Just based on this, we probably need to go down, and that's also, you see that in price. And I said you can really go either way, you can go either way. We can go higher, we can go lower, but just the fact that we want to see this lower, and nice to see that plays out. All right, then let's quickly move over to BTC because we had 4 trading setups, and BTC just pounded through all the support and resistance that we had drawn out. We had a short here from the golden park at 78.6, as you might remember from last week, but we just slowly marched higher and higher, and also had a short from this high right here, but also we just slowly broke it. So actually we can just take these two off. Matter of fact, we also took out the high here, so we can take off the fib retracement. Then we had 2 longs that was from these lows right here and one from these lows. I will keep them on the chart. They're not really my favorite anymore. They're also relatively low to where we are right now. I'll just move a little bit to the right. They could still play out, but I don't see that happen today or tomorrow. So what are then now the major targets that we're looking at? I'm quickly going to zoom out on the daily. So we still have that major area that we are trading in already for a while. There's actually this entire move right here, and now we are slowly getting to the top of the range again. We have 2 major highs. First of all is the yearly high, shy of 32,000, 31,843, and then we have 32,450, and those are the highs from this region right here. Would we also break that and start closing? In this case, I would ask for weekly candles above. A daily above is not enough for me. I want to see a weekly close above that level. Well, I have to say, then we can march pretty fast, much higher, all the way up to into the 40,000s. For both of these trading setups, they could play out pretty much in the same way, and that is that we're passing it or an SFP and then just coming down. So if we would do something like this, then eventually backtest it and then go lower, I will definitely take that trade, and then you can enter on the retest. So that will be here, or on the SFP if we dump down very fast, then right away this way you enter, and then you put your stop loss above the wick, but then of course at this level, so this is then your entry. And then of course for that other high I would do exactly the same. So if we then move higher, something like this, and then eventually we are losing the level and retesting it, then of course here also then you can enter on your short here. But would we just do a very quick bounce and then close in the candle here? This is your confirmed SFP. Would also take that trade. You hope of course that it kind of close to the end of the wick, because if else you have a very big stop loss. But those are for now the major levels that I'm looking at to short. If we're just looking at market Cipher B, let me quickly put these 2 trades in. So this is number 1. and then of course number 2 is then slightly higher. After that, like I said, I think it can be a very swift, fast move up all the way up to into the end 30s, beginning 40,000s. Then if we are looking for possible longs, and then I'm quickly going to zoom back into the 4 hourly. We're also then going to look at market Cipher B. You could say, you know what, I'm going to short every bearish divergence that I see, but then you would have been already stopped out. So I've said this already many times. You will see without a doubt that we have one divergence after another, and then eventually there is one, and that is then the trigger. And of course you will see it then on Twitter, and I don't know where the people are saying, oh, I caught the top and now I'm short, but they're not going to tell you how many times they got wrecked. So this is the first one that I just drew out. This was a bearish divergence, momentum wave coming lower, price going slightly higher. You would have been ever so slightly in profit, and then you would have got stopped out. Now we have the second one already, where we also still have a lower momentum wave. Doesn't really matter how you pull it, and a higher price. But you can see the money flow is still very fat, and especially here on the 4 hour, this is going to continue for a while. It probably takes a couple of days before you see the money flow coming down. If we're looking on the daily, I talked about this last week, and I said, ooh, that would be nice if we get a swift move up and then we have a bearish divergence. But of course that is now invalidated, because you can see that the second wave is much higher than the first one. So that whole idea of getting a big bearish divergence is off the table. If we're just looking then at market Cipher B, this still looks strong, still looks good. Money flow thick in the green, view up, holding up well, not once even under the 0 line. RSIs melted together, or at least close to each other. That means strength. They're signaling strength on the buy side. So that so far looks good. If I just would trade based on the indicator, I would say we're going higher, maybe with some small retracements, but so far it doesn't look like it wants to stop out at all. Let's say you missed your long opportunity. Is it then still a possibility to get in the trade? Yes, there is. If I would pull a fib retracement, let's say I put it underneath these lows, that was also one of our long trading setups, then you can see that we actually have a very nice confluence right now with the golden pocket 78.6. We have a significant high, we have the value area high, the macro value area high. So this whole area right here is actually super nice to long. We're starting off then from 29,250 all the way to approximately just under 29,000. What we could also do, this one is a little bit more aggressive, but we also need to look at this scenario, because we barely have any retracements so far. The retracements have been 1, 2, 2.5%, and that's pretty much it. And then we're just marching higher again. Is that we would take a long of this area right here. They would say, okay, we're taking a long from, again, the golden pocket or the 78.6. Your stop loss then goes underneath these lows. Why is this aggressive? Because you still have these lows, and of course you have all of these levels underneath. But like I said, this is a bit of a drop. So we're talking about, let me see, 4 or 5%. Yeah, I have to say, in these market conditions that everything is just pretty bullish and that we're going higher, I don't think that we are getting this the drop here to 29 anytime soon. So therefore I would be looking to get a little bit more aggressive on these kinds of trades. But like I said, you have a chance that you're getting stopped out, and you do need to put your stop loss underneath these lows, or at least the 78.6. So your risk to reward is not perfect, but you could give it a try. So just adjust then your leverage and your position size. Make sure that you don't put too much on the trade. And the first target really would be these highs, but actually I would prefer to then reach the yearly highs right here at shy of 32,000, and then you're getting a 1 to 3 risk to reward. If we're quickly zooming out to these highs right here, so what are we looking? Actually you can see that it's just not a lot of resistance, because we took out all of these highs right here, and now actually it is just one swift move up to this top. So I actually expect that that could happen today or tomorrow, because there's not a lot of resistance. I haven't seen anything too special in the chart. There's not a huge sell wall or anything. So I think it's just a matter of time before we're going to tap it. And then of course the big question is, how are we going to react once we reach these kinds of levels? I would not enter a long here. I would really wait until we see maybe a little bit of a retrace. That could be during New York Open. Also here, by the way, again a nice example of having bearish divergences on the chart. But they probably are not going to do all too much. You can see momentum wave is coming lower, money flow is already coming lower, price slightly higher. But you also had it here, but of course also here price went higher. So when you have these pumps to the upside where you're really just stair stepping higher, 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 don't jump into all the short trades that you can see, the possibilities, or when you do, make sure you TP very, very fast, 0.5%, and then take half of the trade out, because yeah, like I said, you can just march higher and higher and higher, and then to really get the top, or to at least get into a short trade, you want to see a change of market structure, or at least multiple of your indicators lining up all at the same time. And still you could be wrong, but that is at least something I would do. So I would then really search for multiple confirmations before you enter in short. Nothing goes up and down in a straight line, but you want to see at least a little bit more. Last thing I want to show you is the fear and greed index. We're not even yet in greed territory. I actually expected this to be slightly higher. Back in the days we always used to look at this, but it's nice to see that we're a little bit more now towards neutral. I think 1 or 2 more green days and then we are in this greed area. What I'm especially looking out for are these 2 levels, but also the daily. How is market Cipher going to behave once we reach these levels, and what do I see? Do you already see a red dot? Do you see the money flow coming down? That for me is super important. And then eventually I will play the move to the downside. Once that happens, of course, we will look again at a few trading setups and trades that we can take. But for now, you have these 4 trades. So a long, a little bit aggressive from the current golden pocket 78.6. Then we have this area right here. I actually need to put it in. And then, of course, we have these 2 smaller longs underneath us. And then we have the 2 biggest shorts from these levels, the yearly highs and that significant high that I just pointed out, 32,500. Would we also breach that, then of course I will make an emergency update, but then at least now you know what I'm looking at. Alright guys, I hope that was useful, and I hope that you can use this at least for some trading this week. If we see some crazy movements, again I will update you again with a emergency video, or on Twitter and Instagram, so make sure that you check that out. Also feel free of course to like and subscribe, click on the bell, click on all so you don't miss anything, and I'll see you guys very, very soon again in the next one. Bye bye.